Okay. So students, problem number 5. Let me read it for you. From the following trial balance of Ajay and Vijay, you are required to prepare trading and profit and loss account for the year ended 31st March 2009 and balance sheet as on that date. Capital accounts, Ajay Vijay. Purchases and sales, sundry debtors and creditors, bills receivable and payable, commission, both. If you see the amount, it's in the debit as well as credit. So commission paid and commission received. Opening stock, wages, investment, postage and telegram, insurance, plant and machinery, furniture, cash in hand, carriage, bad debts, prepaid rent and salaries. Adjustment. The closing stock is valued at rupees 31,000. Sale of machinery rupees 5,000 wrongly included in sale of goods. We have done this adjustment in final accounts some time ago. I thought like you must have forgotten. That's why I put this adjustment again. Depreciation on plant and machinery by 10%. Insurance of rupees 500 is paid in advance. Provide for further bad debts rupees 1,500 and commission due but not received rupees 1,200. So you have adjustment on plant and machinery, 2 of them, then on insurance, then on debtors and commission received. Tick mark those items in the problem. Tick mark plant and machinery twice, then insurance, then debtors and commission received. Okay, so let's start. Students, draw the format. Trading profit and loss account. So you have trading P&L account. Write in detail in the books of Messrs. Ajay and Vijay. Then after that, trading and profit and loss account for the year ended 31st March 2009. Then in the trading account, don't forget your good habits. Write and keep 2 opening stock, 2 purchases, below purchases leave a line, then write by sales. Sales has one adjustment on sale of machinery, so leave one line below sales. Okay. Then in the P&L account, write gross profit on the credit side, by gross profit. On the next page, you have balance sheet as on 31st March 2009. On the liability side, capitals, Ajay, leave 3 lines and then write Vijay. Okay, so students, are you all ready for the 5th problem?
Yes,
Yes, sir.
Yes, sir.
Okay, let's start. Trial balance, the first item, capitals, Ajay 60,000, Vijay 35,000. So right, Ajay in the inner column, 60,000 and leave 3 lines and write Vijay in the inner column 35,000. Okay, next, purchases and sales. Purchases 46,700, trading account debit side, there's no adjustment on it, outer column 46,700. and the credit amount is sales. So sales is 85,000. Inner column, there's an adjustment on this, so leave one line. Then bills receivable and bills payable. Go to balance sheet asset side and write bills receivable.
Sir, it's supposed to be sundry debtors and creditors.
Oh, before bills receivable and bills payable, there is sundry debtors and creditors. So let's do that first. On the asset side, sundry debtors in the inner column, 28,000. And sundry creditors on the liability side. Below Vijay's capital, leave 3 lines and then write sundry creditors, 25,000. Outer column. Okay. Then next. Now take up bills receivable and bills payable. On the asset side, bills receivable, 5,000. And bills payable will be on the liability side. Below creditors, bills payable, 6,000. Then next is commission. Now the balance is given in the debit as well as credit. So that means commission paid and commission received. So the debit amount of commission write in the debit of P&L account, which is commission paid. So write to commission, and the amount is 4,600. And there is commission given in the credit column, which is commission received, right, in the credit of P&L account. By commission, inner column, 1,800. So students, please note, commission, discount, interest, rent, if it's given in the debit of the trial balance, debit P&L account. If it is given in the debit of a credit of trial balance, write in the credit of P&L account. Debit is paid, credit is received. Okay. After that, opening stock 18,000. Go to trading account, debit side. First item, you've already written the word opening stock. So write there 18,000. Next is wages. That also in trading account. 2 wages. And the amount of wages is 9,900. Next, investments, right on the asset side of the balance sheet. And the amount is 13,500. Investments 13,500. Next, postage and telegram 3,600. Go to P&L debit. Profit and loss account debit side, right, to postage and telegram. Now this is the old problem, students. Telegram doesn't exist. It's now no longer in use. The postal department stopped telegram long time ago. But it's a very old problem. Now, I forgot to change. I should have made it postage and telephone. Anyway, some old knowledge for you. Postage and telegram, the amount is 3,600. Next, insurance 1,200. Again, P&L debit to insurance. This has an adjustment. So write in the inner column 1,200. Plant and machinery. Go to the asset side of the balance sheet. Plant and machinery 40,700. 40,700. It has 2 adjustments. So leave 3 lines. 40,700 in the inner column. And see that you leave 3 lines. Next, after plant and machinery, furniture, again on the asset side. Furniture 18,000, no adjustment. Outer column 18,000. Next, cash in hand 2,500. That is also an asset. Cash in hand 2,500. Next, carriage 3200. So trading account debit side to carriage 3200. After carriage, bad debts 400. P&L account debit side. Below insurance, leave one line and write 2 bad debts. In the inner column, 400. Next, prepaid rent. Go to the asset side of the balance sheet and write there prepaid rent. The amount is 7,000. And last, salaries 10,500. P&L debit, profit and loss account debit side, salaries 10,500. No adjustment, right in the outer column. Okay. Then adjustments. Take the first adjustment. Closing stock is valued at 31,000. Trading account debits credit side. Leave 1 or 2 lines and then write buy closing stock 31,000. This is your one effect, the credit effect. Second effect in the balance sheet asset side. Closing stock 31,000. Okay. Students, now we have done this problem. In fact, I did 2 problems with you. It was a little confusing, I remember. That's why I have given you this adjustment, modified the problem to take care of your past difficulties. So I would like to have a small discussion on this. Regarding sale of machinery wrongly included in sales, rupees 5,000. What will you do, students? Tell me 2 effects.
Deduct from sales.
Correct. Deduct from sales, because when you sell goods, only then you should record it in the sales book. But if you have put it somewhere else, okay, it is sale of machinery and you have put wrongly in sale of goods. So take it out from sale of goods. So subtract from sale of goods. So go to trading account credit side and write there minus sale of machinery. Sale of machinery 5,000. Outer column 80,000. Okay, this one effect, students, and you took out something from the credit side. This is your debit, this is your credit. You took out from the credit side. You must think of subtracting from the debit side as well. And that's why deduct from sale of machinery. Now the reason is like this. When machinery is sold, it was not touched. You took that amount and put it in sales. When you sell machinery, machinery goes out. And you have not recorded that part. You did not touch machinery account. When you sell machinery, you should have recorded in machinery account. You didn't record it in machinery account. You record in sales account. And that you added in sales. So deduct from sales. Actually, what you should have done? Deducted from sale of machinery. Because when you sell machinery, machinery should become less, which has not become. And that's why you go and deduct from machinery. So the second effect is go to machinery account and write there minus sale. And the amount of sale is 5,000. Deduct and write in the inner column. 35,700. Okay, students, whenever in doubt, keep your debit, keep your credit. First, you deducted from credit. You have to deduct from the debit as well. Credit less, debit less, balance maintained in accounts. All adjustments, always remember, you will do 2 effects. Either do both increase or both decrease, or of course, increase debit and decrease debit also is there. But you are deducting from both sides. It should affect sales and machinery. So one is debit, one is credit, one is asset, one is shown on the income side. So income is credit. So deduct from debit, deduct from credit, and the balance is maintained. That's what you have to see. So remember this sale of machinery. There are two problems in the textbook. One more time, revise that. Okay. And I'll give you this adjustment in future also, because I know that you always make a mistake here. So I'll repeat this many times. Okay. Next. Depreciate plant and machinery by 10%. Now deduct plant and machinery straight away by 10%. They didn't say per annum or anything. So when they don't say per annum, just see the amount 35,700. Calculate 10% of it, which is 3,570. Outer column will be 32,130. And second effect, P&L debit to depreciation on plant and machinery. Second effect of depreciation. Okay. Now, the next adjustment. Insurance, rupees 500 is paid in advance. Prepaid insurance, deduct from insurance, minus prepaid. Amount is 500. Outer column 700. Prepaid expenses are shown on the asset side. So go to the asset side of the balance sheet and write there prepaid insurance 500. Next, further bad debts 1500. Deduct from debtors bad debts minus bad debts 1500. Outer column 26,500. Second effect of bad debts, P&L debit plus new bad debts 1,500. Outer column 1,900. Next, the last one. Commission due but not received. Outstanding commission. Any outstanding, whether it's expenditure or income, add. So add to commission plus outstanding. Amount is 1,200. Outer column 3,000. Second effect, outstanding income is an asset, and also see you added in the credit first. Now adding in P&L account credit was your credit effect. Second, add in the debit, and debit in the balance sheet is asset side. So here you write outstanding commission 1,200. In the next chapter, this is very common, outstanding income, and it's an asset 1,200. That's it. So students, we have finished the entry. Now let's close the books of accounts. Yeah. Calculate the gross profit now. Take the total of the credit first. 80 plus 31. How much it is? 1,11,000. 111,000. Write the same in the debit. And now find the gross profit. For finding the gross profit, take the total of the debit and deduct from the total of credit. So take the totaling 18,000 plus 46,700 plus 9,900 plus 3,200. That's equal to 77,800. Minus 77,800 from 1,11,000. And you will get 33,200. Bring 33,200 down. By gross profit brought down 33,200. And now let's take the totals of P&L account to find out net profit or net loss, whatever it is. So let's take the total of credit side. 33,200 plus 3 is 36,200. The debit side total 4,600 plus 3,600 plus 700 plus 1,900 plus 10,500 plus 3,570. That comes to 24,870. 24,870. Deduct. You will get 11,330. Profit sharing ratio is not given, students. So divide equally. So if you divide by 2, you will get 5,665. So show this in P&L debit, the net profit. To net profit, in the inner column, Ajay 5,665 and Vijay also 5,665. Total will be your net profit, which is 11,330. And the total of P&L account was the credit side total, which is 36,200. And the net profit is added in the capital. So in the liability side of the balance sheet, net profit add to capital, Ajay plus net profit 5,665, and the total of his capital will become 65,665. Vijay also same net profit add 5,665. Outer column 40,665. And check whether balance sheet tallies. So take the total. The liability side total is 65,665 plus 40,665 plus 25,000 plus 6,000. That comes to 1,37,330 on the liability side. Asset side 26,500 plus 5,000 plus 13,500 plus 32,130 plus 18,000 plus 2,500 plus 7,000 plus 31,000 plus 500 plus 1,200. Does it come to 137,330? Yes.
Yes,
Yes.
sir.
Yes, sir.
So we have finished the fifth problem in record time. Very fast. Okay, you all have any doubt, difficulty on this, students?
No, sir.
No, sir.
Everybody?
No, sir.
Is there any yes in this group? Okay. Sure. Let's go on quickly to the sixth example. Okay, students, let's begin the last problem. I'm going to read it quickly for you and then we discuss and solve it. Sanjay and Sudhir are partners sharing profits and losses in the ratio of 3:2. The trial balance of the firm as on 31st March 2010 was as follows. Trial balance as on 31st March 2010. Just a minute, student, I changed my spectacles. Okay. Trial balance Opening stock, purchases, debtors, wages, salaries, land and building, plant and machinery, furniture. Advertisement for 2 years. Bills receivable, insurance, drawings of Sanjay and Sudhir, cash in hand, rent, power and fuel. On the credit side, capitals of Sanjay and Sudhir, sales, sundry creditors, bills payable, discount and outstanding rent. Adjustments. Stock on hand on 31st March 10 at rupees 35,000. Write off 2,000 for further bad debts. Provide reserve for discount on creditors at 5%. So tick mark debtors and creditors. Next. Provide interest on drawings. Sanjay 200, Sudhir 300. Nothing to tick mark. We will just be deducting from capital. Credit purchases amounted to 4,000 were not recorded in the books of accounts. So tick mark purchases on one hand. And what do you tick mark, student, next for unrecorded purchases? I want to hear from you. Priyanka Chopra. Anybody? Tick mark purchases and second effect tick mark?
Creditors.
Creditors, yes. Now creditors have two adjustments. Students, before you could do reserve for discount on creditors, first do unrecorded purchases and then do creditors. Be very careful. But you will definitely make a mistake. To avoid the mistake, connect adjustment number 3 to adjustment number 5. So 3 will be done in place of 5 and 5 will be done in place of 3. That's how you remember that. Next adjustment will be provide interest on partner's capital at 5%. Again, nothing to tick mark, but you will be adding to capital. Okay. So let's start, students. Is your format ready?
Yes, sir.
Yes, sir.
Yes, sir.
Okay. And remember, there is a small mistake. The year, the last line, prepare trading and profit and loss account for the year ended 31st March 2010. It's become 12 by mistake. Please make it 10 and balance sheet as on that date. Okay. So let's see the format. So check. Trading and profit and loss account for the year ended 31st March 2010. Then the first item in the trading account, check whether you wrote opening stock. The next one, purchases. In the credit side, did you write sales? Then gross profit in the P&L account. In the balance sheet as on 31st March 2010, liability side capitals. Sanjay, today leave 4 lines for this particular problem because there is interest on drawings, interest and capital and net profit or net loss. 3 would be sufficient, but just to have one extra line. And Sudhir also leave 3 to 4 lines. Okay. Should I start, students?
Yes, sir.
Yes, sir.
Anybody says no? No. Let's start. Okay. So we start with opening stock 20,000. Trading account debit side first item to opening stock 20,000. Next, purchases 30,000. And then there is an adjustment on purchases right in the inner column and leave a line. Then debtors 12,000, asset side of the balance sheet. Debtors 12,000, inner column 12,000. Next, wages 5,000, trading account debit side. Wages 5,000. No adjustment, right in the outer column. Next, salaries 10,000. In P&L account, salaries 10,000. No adjustment, that's why I write in the outer column. Then, land and building 30,000. On the asset side of the balance sheet. Below debtors, leave one line and write land and building 30,000. No adjustment. Outer column 30,000. Next, plant and machinery 25,000. That is also on the asset side. Plant and machinery, outer column 25,000. Students have not taken adjustments of depreciation in the practice examples because the 20 problems that we did from the textbook and more also after that, we always had depreciation. So I thought like I'll concentrate on main adjustments wherein you have got less practice. So that's why depreciation has been taken out. You know that very well. So I've concentrated on other adjustments. After plant and machinery, furniture 16,000. Again on the asset side, furniture 16,000. Next, advertisement for 2 years, P&L debit. Advertisement for 2 years is 6,000. Now, you know that, first write in the inner column, then I'll explain. Advertisement 6,000. Now you know, you cannot pay any expenditure for 2 years, 3 years, 5 years. You have to pay for 1 year. On the heading you have written, trading P&L account for the year, 1 year. So here this is 2 years. So take only 1 year here and remaining what you have paid for future, call it prepaid and put it on the asset side. So out of 6,000, 1 year's will be 3,000 and next year's will be another 3,000. So next year's call it prepaid and take it to asset side. So from advertisement minus prepaid, 3,000. 6,000 was for 2 years. That means 3,000 is for 1 year. Outer column you should get 3,000. And the other 3,000 which is for next year will be shown on the asset side as prepaid advertisement 3,000. You have done this many times. In the beginning you found it difficult, but now onwards you will find it very, very easy. This will happen with the next chapter also. You will find certain things difficult in the beginning. After doing 20-25 problems, it will become easy. Next. After advertisement, bills receivable 8,000. Asset side. Bills receivable 8,000. Next. Insurance 2,000. Profit and loss account. Debit side to insurance 2,000. Next, drawings. Drawings is deducted from capital. So go to liability side and under Sanjay's capital write minus drawings Sanjay 2,000. Now students have found in the solution posted by you, some of you all were adding drawings because figures are one below the other. They all look one below the other and you think it's addition. So if those who feel that they might forget in the examination, instead of subtracting they might add, best is to put brackets for those figures which are to be subtracted. That's mathematical term used for subtraction in accounts. Any negative figure, if you put in the bracket, it means it has to be subtracted. Same thing for Sudhir's drawings, minus drawings, and the amount is 3,000. This also you can put in the bracket. Only those who are prone to forgetting, those who are confident that I will not forget to deduct, then you don't have to put a bracket. But to be on the safer side, put a bracket. Next, cash in hand show on the asset side 5,500. Cash in hand on the asset side 5,500. Next, rent, you know, profit and loss account item, and it's a debit balance. So go to P&L debit side and write to rent 10,000. And last, power and fuel, you put it in the trading account. Any manufacturing expenses debited to trading account. Power and fuel, 3,000. That's it. You have finished with the debit balances. Now take the credit balances on the trial balance. First item in the credit of trial balance is capitals. Go to the liability side. Sanjay's capital is 40,000, right in the inner column. And Sudhi's capital is 30,000, that also in the inner column. Capitals are always written in the inner column to add profit, deduct losses, add incomes, deduct expenses. Sales 70,000. Trading account credit side, sales 70,000. No adjustment, outer column. Next, sundry creditors 21,000. Liability side, below Sudhir's capital hope, totally 3 more lines are to be left, and then write sundry creditors. Inner column 21,000. And you know there are two adjustments, one for unrecorded purchases and the other for discount. So leave 3 lines for creditors. Bills payable 20,000. That is also liability. After creditors, leave 3 lines and write bills payable 20,000. Discount 5,000. This is a credit balance in the trial balance given in the credit. So go to credit of P&L account. By discount 5,000. And last you have outstanding rent 1,500. Any outstanding expenditure is liability. You go to the liability side. Outstanding rent 1,500. Okay, that's it. We finished with the trial balance, students. Okay, take the adjustments. First one, closing stock is valued at 35,000. So trading account credit side, first effect, leave 3 lines and write buy closing stock 35,000. And second effect, asset side of the balance sheet. Next, write off 2,000 for further bad debts. Deduct from debtors, bad debts 2,000. Outer column debtors will be 10,000. And asset side, second effect P&L debit 2 bad debts 2,000. Next, provide reserve for discount on creditors, but I told you that you have changed the number. Adjustment number 5 should be done, unrecorded purchases, and on that total you take the discount reserve. So first do 5th adjustment. Credit purchases amounted to rupees 4,000 not recorded. So your purchase goods are not recorded. So it's unrecorded purchases. You add to purchases plus unrecorded 4,000. Outer column 34,000. Second effect, add to creditors plus unrecorded purchases 4,000, and in the inner column only write 25,000. Okay, you finished the 5th adjustment. Now we'll come back to the 3rd one. So 3rd adjustment, provide reserve for discount on creditors. Now on the total take the reserve for discount on creditors. So minus discount reserve, 5% of 25,000 will be 1,250. Outer column 23,750. And the second effect of this adjustment, you deduct from the liability side, go to the credit side of P&L account. Decrease in asset debit side, decrease in liability credit side. Buy discount reserve on creditors. 1250. Next, interest on drawings. You credit P&L account. So buy interest on drawings. Sanjay 200 and Sudhir 300. Total interest on drawings 500. And the second effect, go to the liability side and deduct from capitals. Minus drawings as well as interest on drawings are two figures to be deducted. Interest on drawings. Amount is 200. Put it in the bracket if you think you will forget. And for Sudhir it is 300. Interest on drawings 300. This also put in the bracket if you think you are going to forget. Next, after fourth, we've already finished with the fifth, and last is provide interest on capital at 5%. So interest on capital is added to capital. Drawings is deducted, interest on drawings is deducted, but interest on capital is added. So on the liability side, you write plus interest on capital. In case of Sanjay, 5% of 40,000 will be 2,000. Interest on capital for Sanjay, 5% of 40,000 is 2,000. And in case of Sudhir, interest on drawings at 5% on 30,000. Interest on capital, 5% of 30,000 is 1,500. And second effect is P&L debit. Interest on capital is an expenditure for the business. Opposite of interest on drawings. Interest on drawings credit side. Interest on capital debit side of your P&L account. So right there, Sanjay 2,000 and Sudhir 1,500. Put it in the inner column, and total interest on capital is 3,500 in the outer column. That's it. So we finished with all the adjustments. Let's close the trading account. So take the credit side total. 70 plus 35,000 is 1,05,000 on the credit side. Write the same in the debit. Find the gross profit now. So gross profit 20 plus 34 plus 5 plus 3. So that is
43,000.
54, 62,000? Yes. Minus 62,000 from 1,05,000. And it is 43,000. Is the gross profit 43,000, students?
Yes, sir.
Bring
Yes,
it down.
Sir.
Bring it down. So students, see the speed at which we have been doing the problem, and I'm happy you were able to keep pace with it. So this is what it is. In the beginning it is tough. We take 1 hour to do a problem. But by the end of the chapter, in 1 hour we can do 2 problems. So we started at 5, we had a pause in the middle, it's only 6, but we completed 2 problems, which means the speed automatically increases. Of course, even I explain less as we go ahead. This is your more than 25th problem. So now take the total of the credit side. I look at the figures and I feel the credit side is more. So 43 plus 5, 48,000 plus 1, 49. 49,750 is the total credit side. Now take the debit side total. The debit side 10 and 3, 13 and 2, 15, 25, 30,500. Subtract. Net profit is 19,250. Is it?
Yes, sir.
Very good. Divide this between Sanjay and Sudhir in the ratio of 3:2. 3:2. So divide 19,250 by 5. 19,250 divided by 5 is 3850. Multiply 3850 by 3. You will get 11,550. Multiply 3850 by 2. You will get 7,700. So show that net profit on the debit side of P&L account. To net profit. In the inner column, Sanjay 11,550. And Sudhir 7,700. Outer column 19,250. Okay. And show the total of the P&L account, which was 49,750. On the next page, add the profit to capital 11,550 and 77. So Sanjay plus net profit 11,550, and for Sudhir plus net profit 7,700. Total capital in the outer column, Sudhir, you have a lot of figures to add and subtract. So it should come to 40, and that 11 is 41,350 or 51,350. Yes.
Yes, sir.
51,350. And in case of Sudhir, it's 30 minus 33 plus that. So 38. It's 35,900.
Yes, sir.
Okay.
Yes, sir.
Very good. And take the total of the balance sheet and check whether it tallies. 51,350 plus 35,900 plus 23,750 plus 20,000 plus 1,500. It comes to 132,500.
Yes, sir.
132,500. And on the asset side, 10 plus 30 is 40 plus 25, 65 plus 16, 75, 81 plus 3,000 plus 8,000 plus 5,500 plus 35,000. Does it come to 132,500?
Yes, sir.
Okay. 132,500. So students, we have completed both the problems in less than an hour, and that should be our target.